Hello. So today we have Mr. Pankaj Tibrewal, a star mutual fund manager from Kotak AMC. So sir has kindly consented to come on this show and share his experiences, his entire journey in mutual funds. It's been like 2 decades, and he's one of the top 10 rated fund managers of India for 4 consecutive years, 2016 to 2019. Outlook Business has given that rating, Economic Times, Morningstar. So he's like a storied fund manager, and we'll hear more from him. Thank you so much, sir, for being on the show.
It's a pleasure, Anurag.
So, sir, you started with from Kolkata, Birla High School, St. Xavier's, and then the 3 M's of your life, the amalgamation happened. A Marwari from Kolkata who did his masters from Manchester University, UK, and that was something which was unheard of maybe in the early 2000s, 1999, 2000, when you went for your masters at Manchester University. And then mutual funds, again, a bit more unconventional as per those times probably. So how did the 3 M's transform your journey?
Wow, Anurag, looks like a story or a script which probably has been written. Honest with you, there was nothing planned in life, and when I reflect back, I think a lot of things came back, and I was extremely blessed and fortunate to have great family support, great friends around me, and great some mentors who kept on mentoring me throughout my journey till now. But yes, I mean when you look back, let's reflect on each of the M's which you talked about. First is yes, I am belonging to a Marwari family, and very early on, in my life, I was very interested in how businesses work, how financial markets work, and it always intrigued me what are the moving parts, how things work in. And as there's a classic template in Calcutta, students, that you join the Xavier's College is about 6 to 10 a.m. in the morning. And after that, the classic template is that the student either goes for a CA, CS, or MBA, or joins his family business. I chose to join my family business with my brother and my father. And honestly speaking, those were the real years of learning, where I learned how businesses are learned, and got the opportunity to see from a very close corner. And till date, after almost 20 years, that learning still helps me. Very early on, I was taught that profit and loss is not the important statement. What you need to look at is cash flow and balance sheet. And I clearly remember my grandfather and my father looking at two statements, which is Rokad and Bai Khata. And they hardly ever used to create P&L. And from the balance sheet Bai Khata, they used to derive the profits, So those were the years where you saw the early, seeding of how businesses are run, and look at business from a very different angle. Also, one interesting thing was that after 6 to 10 morning college, I used to go to my dad's business. And very early on, my brother told me one day that these are the bad debts which we have not recovered for many, many years. It's a challenge for you. Why don't you go to these companies and collect the money? And some were in Cuttack, some were in Bhubaneswar, some were in Delhi. And it was really an experience to go and see how difficult it is to recover money in the Indian context. So I think that part of the family background really helped me in shaping what I am today. And a large part of experience early on came in my career from that background, which very few are aware of it. Also, I was after
What
the
was that
graduation.
business? What was that business?
It's into logistics.
Logistics. Okay.
Yeah. So it was a classic mid-sized business, and a lot of things were done in conventional manner. In those 3 years, I tried to bring in some thought in terms of what technology was, how should we automate it. Some resistance early on, but I think today, when we look and reflect back, I think those decisions when we took that time were very early on, and really helping us now. I think also, you would be surprised to know that after my class 12, I enrolled for CA. And I cleared the CA foundation and joined Lodha and Company for some time. And I went on to audit a couple of very marquee audits for Lodha at that time. One was Paharpur Cooling Towers, I still remember. But early on figured that it's a great course, but no, I'm not made for that course. And my interest lied in finance, in terms of masters in business administration. Heard a lot about it from my cousins and my friends, brothers who had done that. And I wanted an international experience. That's how I wanted to get a flavor of how international universities work, and that's how I landed up in Manchester for my master's course. And it was a brilliant experience, and I urge all of all the youngsters to at least once in their career have that international flavor. I think it's very, very important to get a diverse views across, and very different set of people to network along. And I think still those relationships are coming very handy in today's job. So I think that's where Manchester came in. Unfortunately, or fortunately, whichever way you put it, I was among the very few Indians in UK at that point of time to get shortlisted by the best of the investment banks in London. Unfortunately, 9/11 happened, and visas became a very big issue. They wanted to give it to the students out of EU only, and they wanted to prove that you must have an extraordinary skill to qualify for the EU visa. So unfortunately, I had to come back to India, or fortunately, whichever way you again put it, and came to Bombay. I got a job at Global Trade Finance for 3,000 rupees. It was a very short stint, but I took it. I parked myself at few of my friends' place, for few days. They were in Bombay already after completing their CA, and struggled initially. Then one day I got a call from a person who hired me. His name is Binay Changotia, and he said that there's an opening under him as a fixed income credit analyst. Would I be interested? And immediately I said, yes, why not? And that's where the mutual fund journey started off. This person, early on in my career, had a great influence, and still whatever I am today, I owe a large part, majority part to that person. He's been my mentor all throughout. And that's where the mutual fund journey started in. I started myself as a fixed income credit analyst, and later on moved onto the equity side, tracking few sectors. And then I took up a challenge of managing a small portfolio, which was called MIP. It was about 15-20 crore portfolio. I just requested my boss that along with the senior PMs, give me an opportunity to manage it. And that's where the fund management journey started off from. So nothing was planned. I just took it as it came. And honestly, I've been very, very blessed and fortunate till now.
Oh, fantastic. I mean, it's like a dream run. So many things have happened. Yeah. So the second thing, and the most crucial question is, you manage like $1.5 billion across 3 very successful schemes of Kotak. So what's your template in terms of stock selection? So you have this strategy of having 50 to 60 solid gorillas in your portfolio, and so that some of them can become King Kong. So how do you look at a business cash flow, as you said, like P&L versus cash flow and balance sheet? So what's your entire template, if you could tell us? But that's where, you differentiate the wheat from the chaff.
A very interesting question, Anurag, and I would like to spend some time out here. I think this is very, very important for anybody, I think, over a period of time to succeed in the market. I firmly believe that investing success is an outcome of making good decisions consistently over a longer period of time. It should not be a one-off. And to do that consistently over a longer period of time, you need a framework, or you need a template and a philosophy behind it. We follow this philosophy of VMV, which is business, management, and valuation. And let me take you through, some of the things which I believe is very, very important from a, evaluation of, all these 3 parameters. The first is business. When you look at any company, the first question you ask is, what's the substantial moat or competitive edge for this company? What is the right to win for this company? It may be in terms of product, it may be in terms of technology, it may be in terms of distribution, or it may be the low cost production or the production cost. What is the competitive edge of this company to survive over longer periods of time? The second question you ask is, when you evaluate business, is it a small fish in a large pond or a large fish in a small pond? What it means is that, is the company in sectors where there's a larger opportunity to grow over longer periods of time, or the category is saturated, he's already a leader, and the best he can grow is 3 to 5% per annum because the category per se is saturated and he is already a large market share. The third and the important thing which you look at is the capital allocation. I think that's the most important, one of the most important drivers over longer periods in terms of companies which, catapult into larger sizes, is how efficiently the company is utilizing its capital. And that can be reflected in return on capital and return on equity over a period of time. And by evaluating these parts as the part of business, I think it's very important to get a sense on how and what ecosystem the company is operating and what's the business ecosystem around it. The second most important part, and I think it's a little subjective, but we are trying to bring an institutional framework around it, is evaluation of management. And I think in the break or make of any company, I firmly believe, is the management teams who run it. And we have seen that even if it is in a mediocre business, great managements make it look and run it over a period of time very efficiently and make it a star. And we have seen that inefficient managements or dishonest managements, even if they are in the best of the sectors, they make the company go down. So I think management teams are very important, and we all acknowledge the fact that though we are owners of the business when we own a piece of or shareholding of that business, but we are not going to run the business. It's the promoters, it's the management teams who are going to run the business. And it's very important that they are passionate, they are honest and hardworking. And I think a couple of things which we look into, because it's very difficult to project or predict this part in the future. But you can go back into the past and see how fair, unfair they have been to minority shareholders in the past. What is the gap they kind of say and execute? What is and that's always come by your experience and your analysis of the past rather than the future. Also, how efficiently they have been utilizing their capital is very, very important to understand, because that gives you some character of the management. Also, for example, look at like today's situation, there's crisis going on, COVID crisis is there all across the world. And it's very important that in crisis, you look at what are the opportunities which will be coming along. And for example, we did a template and went back into the previous crisis and saw that how many investee companies in our portfolio have the same management teams which were there in the previous crisis. And how did they navigate the previous crisis well? 3 years, 5 years out of the crisis, how did they grow their top line, bottom line, and without diluting balance sheet and cash flow? So I think it's very important to evaluate managements, and I do a lot of groundwork. To be honest with you, I have a great network of CAs all along, though I'm not a CA, but all across the cities. And you try to speak to the ecosystem, their suppliers, their vendors, their distributors, their employees, their ex-employees, and you get a lot of sense on the quality of the management for sure. So I think that management framework is also very important. Another important part is the cash flow and balance sheet. As I said, very early on in my life, I figured out that profit and loss is not the important statement, it's cash flow and balance sheet. And that's really coming handy today also. We avoided a lot of mistakes in the past by only looking at cash flows and balance sheet, not so much on P&L. And to me, I think this classic statement always is there as a guiding principle, is that top line is vanity, bottom line is sanity, and cash in bank is reality. There's no point in looking at companies which are just chasing top line if it doesn't convert into profit. There's no meaning of accounting profit if it doesn't convert into cash flow. So top line is vanity, bottom line is sanity, but cash in bank is reality. And that is another very important guiding principle, which helps us in picking stocks. The fourth point is, I think, the price you pay, the value you pay. And I think I firmly believe that margin of safety is very, very important. And the price, what you pay, and is the determinant of the return, what you make in the future. We believe that there's no company which is always great. There are cycles for every company, and you need to make sure that you are not overpaying for a company. So though we are growth oriented in our approach, but we believe that growth at any price is not our philosophy. Growth at reasonable price is our philosophy. So these are some of the quantitative templates which we use. At every point of time, you would like that, most of the parameters have a tick mark, but it seldom happens that you go through every parameter and that marks your tick mark. Many times it doesn't happen. So you see the relative weightage of these things, and try to make sure that which has a higher weightage at that point of time. Also, few things which I would like to also talk about, that these are things which you can quantify, but there are a lot of things in this journey of picking stocks which probably are not quantified. You spoke about gorilla to King Kong. Our philosophy is that run a diversified portfolio, own 50-60 good quality businesses which pass through most of these parameters in the part of template. On the hindsight, we will know which was a multi-bagger, honestly speaking. At the time when you are picking up stock, you know that these are good businesses. These may be compounders run by efficient and honest managements. But at that point of time, honestly speaking, nobody knows that this is going to be a multi-bagger in the future. And you keep evaluating your thesis time and again. But we have seen in the life cycle of a company, they are never in a straight line. They are always ups and downs, and they always goes through cycles. And it's very important to be patient along that journey. Just to give you an example, for example, look at Amazon, for example. It got listed in 1995. And in the 2000-2001 tech bubble burst, the stock went down by more than 90%. And from there, in 2020, we are talking about a company which was few $100 million at that point of time, is now more than almost $1.2 trillion. Half of the GDP of India is just one company in US. So I think these are some of the important things which probably one needs to understand, that we all read about greed and fear in the theory textbook. बहुत अच्छा लगता है सुनने में कि है ना, नीचे में लो ऊपर में बेचो. But जब practice में आप करने जाते हो ना, बहुत difficulty होती है to fight that greed and feed emotion, and to travel to that emotional cycle is a very, very important thing. Look at what is happening today, or what happened in 2008-9 or 2000-2001. The situations are always there that, in time of crisis, everything looks bad. The future looks hazy. You are in the middle of a tunnel which is dark. So at some point of time, you need to fight and travel that emotional cycle within yourself and from a company's perspective also. And that's how you try and develop that habit of cutting out noise. I think that's very important, because in today's world, there's so much of overlaid of noise and news that over a period of time, you need to make sure that you cut a lot of noise, focus on the core, focus on what your companies are doing, and make sure that you don't lose the larger picture of that company. And just ask yourself during adversity, is this company going to survive the crisis? And if yes, over the next 3-5 years, how much will be the profit pool of this company? How much profit this companies can make? So focus complete bottom up. And I think that's where a real picture, and these are qualitative stuff. They are a lot written in books, lot written by practitioners. But when you actually face it in the actual marketplace is the real test. Also, we believe that time is a great friend, or a friend of a great company, but enemy of a mediocre one. So we keep evaluating our thesis on businesses from time to time. Many times we have come across, Anurag, where for a year or two, the businesses have actually stagnated, not done anything, both in terms of operation and stock prices. but you don't give it up. You go back to your original thesis on why you bought it. You see that whether is there any concern on corporate governance, is there any concern on capital allocation, and if it's not, probably it's just the time period which the company is going through. But strengthening the cause of the company, I think we use that opportunity to increase the position rather than going and selling because last 2 years the stock hasn't done well. So I think these are some of the way we kind of are going about. And obviously I believe that uh, as a practitioner, that all of us focus on where we can make the next 200%, 300% in which stocks over the next 6-12 months. But I always kind of invert the situation, and we always kind of invert the situation and ask ourselves where you can't lose over the next few years. I think the latter is the often the times where you will find the next multi-baggers. I think this is very, very important. And it's very, very, it's a reality that the less mistakes you make, the less stupidity you do, you will be surprised to see how good things happen in your portfolio. So don't try and chase multi-baggers, but invert the situation and ask that which are the stocks where I can lose and where is that margin of safety which is not there. I think there where if you can do it consistently over a period of time, you will make less mistakes. And if you make less mistakes, good things and multi-baggers and compounders will be a part of your portfolio. So see, these are some of the things we are going about, but I'll be humble in my admission. I'll be honest in my admission that if you do a scale of 1 to 10, probably I will be at probably 1 or maybe 1.5. There's a long journey. We are all students of the market, and we all have to be humble in our approach. We will make mistakes, but we have to learn from that mistakes. There are so many, great people have written about their mistakes. I try to make sure I read a lot of them and make sure that we don't make the same mistakes again. So I think these are, things which we every day learn from our journey. But some of the things probably if somebody is starting new, if they can have this kind of a framework and both qualitative and quantitative, I think over a period of time, they will be far more successful than without a framework.
Fantastic. I mean, this is like pearls of wisdom. My next question is like $1.5 billion, as I said, that you manage. So much trust is reposed, and this would include like a 5,000 rupees per month SIP, which someone has done in your fund for his daughter's marriage, children's education. So how do you, I mean, there's like a lot of responsibility that you shoulder from a moral standpoint as well, apart from the numbers going here and there. So just quickly, if you could tell us about that before we head to the next section.
Anurag, it's a very emotional question for me as well. What gets me going every day when I wake up in the morning is the trust of millions of people who have reposed on us as an institution, that these are the guys who will manage my money nicely over a period of time. And when you go to investors meet, trust me, Anurag, there are people, as you rightly said, with 1,000, 2,000, 5,000, 10,000 rupees of monthly SIP going in the fund. And they come and ask, there may be a 60-year-old, 70-year-old person, beta, mera paisa theek hai na? That line and that, accountability and responsibility is something which keeps you awake all night as a, fiduciary responsibility. And I think that's a very big responsibility for all of us who are managing public money, that our conduct, our way of approaching things, and we went through the template, should be such that we make less mistakes. See, nobody can be perfect. We are not God. But at the end of the day, if you make out of 10 calls 3 mistakes, it's perfectly fine, because you will come out much better, beating your benchmark and on a relative basis. But if you make far more mistakes than right calls, I think that's where the problem is. So I think it's a huge amount of burden of expectations, burden of responsibility, accountability. And, life of a fund manager is, measured every day, I say. The companies report earnings on a quarterly basis. People are evaluated on a yearly basis. But fund managers, anybody across the world, can go to any site at the end of the day, at night, and see how this fund manager has done. So I think I think that responsibility is something which is very, very high, and that keeps us going every day. That how we can add value to the investor who has invested in us. I'm sure they have invested with certain goals in mind. That after 10 years, I want to have my kids' education. After 15, 20 years, some marriage or house proposal. And there's a large part of expectation those guys are running with us. And it's our responsibility and I feel our accountability and answerable to them. And that's a very, very big one, Anurag.
Great. So I'll just move to the rapid fire question round so that we can just quickly do some parts. So what are the underrated factors in the success of a fund manager? I mean, a lot is said about people who are successful, but then what's there which is beyond the obvious?
A very good question, Anurag. I think I personally believe that the role of luck, karma, courage, hard work are the most underrated things in fund management. I think you need each. You need to be and if
Luck.
you want to.
You spoke about luck.
Yes, I think we have spoken about the template. We have spoken about the art and science of how to pick up stocks over a period, how to ride that emotional cycle of stock prices and greed and fear. But I think luck also plays a very important role. Karma. I think what you have done in the past, probably I believe it comes around circle to you. So keep doing the right things, keep helping people, keep help them building their financial independence over a period of time. And somewhere I think the courage is also very important, because you need courage at the right time to execute your thought process. You need the courage to do it rightly. So and all that thing also comes from hard work. I believe that at times of crisis, the difference between one person and another person is the insight that person is having on the sector and the stocks which they own. I think you have a decisive insight on many sectors and stocks which you own will give you that courage, and that comes from your hard work which you have done over many, many years on that stock and investing company. So I believe that these are the four most underrated things in the life of fund management. We should give due credit to all the four of them. And I believe that, luck, courage, karma, and hard work are the most underrated parts in fund managers' career.
Fantastic. The next question is, what is the portfolio allocation that you would recommend to a viewer from a thematic perspective?
There's no right or wrong answer, Anurag, for this. I always get this question that, what should be the asset allocation? It would differ from person to person. A young guy who's starting earlier on in the career and probably have 25, 30 years of working life, I would suggest that develop into the culture of saving very early on in the life. And if you save a part of your, salary or your income very early on, probably you will develop a very big kitty, and that could happen by investing in asset class called equities. I'm a great believer in this asset class called equities, and I believe that the compounding which can happen in this asset class, probably it will not happen in any other one. So
and the
there's no
split
right.
between mid cap, small cap, large cap?
So if you are a young guy, maybe 50-60% could be your mid cap out of 100 rupees of equity. If you are a slightly aged person, I don't think you should have mid cap and large, because inherently they come with their own volatility. You should mainly be in asset allocation products, fixed income, or a large part in multi cap and large cap. But if you are in your early age or mid 30s, mid 40s, a good portion of your asset allocation and equities should be in mid and small cap, maybe 50-60%.
Perfect. For a mutual fund aspirant, I mean, there have been a lot of people who want to be a fund manager. So what is the typical career path? Yeah.
It's okay.
Yeah. So, these kind of people are very aspirant that, yeah, I'm a CA and an MBA, CFA, probably it's degree agnostic. So what would be your mantra for someone who wants to enter the mutual fund industry?
Anurag, I think there are a few things from a overall perspective from a career path. And I think one of the things which you probably should know that before managing public money, I think it's very important that you invest your own money in the markets and learn from it. And I think it's a huge responsibility and accountability as we discuss managing public money. So first, you should know whether how successful you have been managing your own money as well in the market. And you will learn a lot by making mistakes by managing your own money before you move to the public arena. Second, I think, the another advice which I would probably like to give to aspirants who are aspiring for this industry is that, you have to read a lot. Read anything under the sun, any big ideas from the key discipline, and it will teach you a lot. What I come across is many, youngsters today don't read a lot. They try just, reading, going through some videos and all that. But I think reading a lot across disciplines helps a lot. For example, mathematics teaches you compound interest, permutation, combination. Physics will teach you law of equilibrium, mass, etc. Literature will give you critical reading, analytical thinking. So every key discipline will come with its own learning. And later on in your life, in fund management, when you are practicing investing, I think you will realize that many of these key disciplines application helped you in the past. So I think that's the second most important, that read a lot. The third is, I think, very, very important to know that you need to understand that, you need to be passionate about this job. I think in this job, there will be a lot of pressure. You will go through highs and lows. And I think it's very, very important to make sure that you are passionate enough to continue this for a longer period of time as a career. And fourth, I think this market gives you high very shortly and very fast. So you need to be humble. You need to acknowledge the fact that you have a limited role to play. And a lot of part which happens is just happening not because you are great, but because circumstances have been favorable to you. So you need to be humble enough and make sure that every day you treat yourself as a student of the market. I think it's very, very important that don't lose the larger picture. I still get fascinated, Anurag, when I look at the two people, the greatest investors of all our time, Mr. Warren Buffett and Mr. Charlie Munger, still in their 90s, every year coming to the AGM, answering hundreds of questions across media, analysts, and still accepting the fact that we don't know. And they say that we don't know. This is what in the last AGM they said to many of the questions. So I think it's very important to maintain that humbleness and the approach that you are always a student of the market.
Fantastic. So in hindsight, we become more intelligent. So what is the advice Mr. Pankaj at the age of 42 will give to Pankaj at the age of 20?
Very early on, as I said, you have to start saving and you have to believe in the equities as an asset class. We have seen that over the last 30, 40 years, if you leave out dividends, this asset class has given you 15, 16% compounded return. And if you add 1 or 2% more of dividends, it's 17, 18% of compounded returns in this asset class for a longer periods of time. Look at in early 90s or maybe in 2000 early, the, index was moving from 800 to 1,000, then 2,000 and 3,000 range. And today, even after correction, you are at 33, 34,000. So this asset class over a period of time will compound. And to be in this asset class and to make sure you make wealth over a period of time, you need to be optimist. You need to make and believe that the future is always better than the present. And for that, I think you need to make sure that the early on savings which you do are properly invested in this asset class. And I think that's one advice. And the second thing I would always say that be passionate in whatever you are doing. If your passion is art, science, maybe medical, maybe law, pursue that. But have a part of our savings invested in this asset class so that the wealth generation could happen.
So you are known as the Chief Happiness Officer at Kotak. So what's your mantra to make yourself relaxed, your team members? So CHO, as that would call it. So that's an interesting CXO thing.
I think, yes, that's true. And we believe that, the outcome, what you see in any organization is is the culture of that organization. I think we always go by, quantitative templates, but I think a very important softer aspect for any organization is the culture and the way employees think about themselves. Are they happy or not? And I think it's a very important and a softer aspect for success of any organization. And I would like to say that today, as a team led by Nilesh, Harsha, today we are one of the, when we reflect back, we are a very happy team. We keep on organizing, team bondings along with family as well from time to time, and make sure that everybody is relaxed. We will have our ups and downs, but whether we are together as a happy team, will make sure that we can pass any obstacle which comes in our way. So I think happiness is very important, and for ourselves as well, you need to be relaxed, because we are in a very high pressure job, and we make sure that at least I make sure that I do my daily meditations, daily yoga, chanting which I do, and playing with my kid, is the biggest stress buster. So you need to develop certain kinds of hobbies along with it, which de-stresses you and relieves you from the high pressure job which we are in. So I think from a happiness perspective, we keep on doing team member bondings as well as family bondings, and that has come a long way in making sure that we are a happy team, and the outcome clearly suggests that.
Yeah, because NAV, alpha, beta, I mean, everything is there. You're always neck is on the firing line, and you're talking about happiness. So sounds counterintuitive, but it gets reflected in the results which the funds are generating. My final two questions. So one book that you're currently reading.
So, I think one book which I just recently completed was All I Want to Know Where I'm Going to Die, So I'll Never Go There. It's a wonderful book, and again it comes to our same philosophy that don't chase multi-baggers, but invert the question and ask that what are the mistakes you will not make, what are the stocks or the things which you will not probably choose, and where you are probably knowing that you will going to die, you will not go there. So the book is all about that. And I give this cricket analogy, Anurag, that as a batsman, you don't need to hit every ball out for a 6 and a 4. You need to make sure that at time of crisis, you are there on the pitch and you're not out. If you are not out, there will be a lot of opportunities for you to make and create wealth. But if you are out, you can go into the pavilion and give all kinds of knowledge and gyan that ऐसे बैटिंग करना चाहिए था, वैसे बैटिंग करना चाहिए था, but pitch से तो आप बाहर हो गए. So I think it's very important that you understand that you are on the pitch. And I give this example of Don Bradman, who has been one of the greatest cricketer of all times. And you'll be surprised to know that in his career of 80 test cricket matches, averaging 99, he just scored 6 sixes. Can you beat that? So as a batsman, you need to know which ball to leave, which ball to hit. And as a fund manager also, you need to make sure that you make less and less mistakes. And as a result, probably the portfolio outcome will be very good. So this is one book I think very, very interesting. All I Want to Know Where I'm Going to Die, So I'll Never Go There.
My final question, your favorite song and favorite movie?
Achha, interesting one. So the favorite movie, clearly, I think one is, The Three Idiots. I think a lot of message in that movie. And I personally relate with that movie a lot. I've watched it many, many times. And the first message is that, and it applies to all of us, is that please don't run after success. Achieve excellence in whatever you do, and success will automatically come, And whatever you do it with so much of passion and fun that you enjoy it. You love doing what you are doing. And trust me, you can achieve greater heights with ease, and, you will be surprised. So I think Three Idiots has a lot of message. That movie has a lot of message and very nicely projected. And that's goes as one of my favorite movies. Song, probably this one. रुक जाना नहीं तू कभी हार के. And I think this song sums for all of us that, adversity will be there, highs and lows will be there, but make sure that you face them with courage and conviction. And as I say, कभी अंधेरा नहीं रहता है, कभी रात हमेशा नहीं रहती है, रात के बाद सुबह जरूर होती है. So always make sure that you're optimist in life, and you look forward for a great life where you can contribute to the society, contribute to the larger aspect of society. And if you believe that you have the courage and conviction to face adversities, I think good will happen in your life. So रुक जाना नहीं तू कभी हार के by Kishore Kumar. This is my favorite one.
Thank you so much, Mr. Pankaj. It's been a pleasure and so much to learn in this so little time. It's been a pleasure having you on the show. I'm sure viewers are going to just love this kind of an insight from a person of your stature to come on this show and talk to youngsters. We are honored. Thank you once again.
Thanks, Anurag. And I would like to compliment you that you are doing this great initiative on the behalf of Xaverians also. That whatever little we have learned in our careers in the last 2 decades, probably it's a great opportunity to share with youngsters and people who aspire to be in financial markets and in equity markets. And I think there's a lot of opportunity probably for all of us there. So compliment to you and kudos to you for taking this initiative.
I'm humbled, sir. Thank you so much. All right. Bye-bye. Thank you.
Bye-bye.